Good morning, candidates. This is for Central Warehousing Corporation accountant post interviews. This will be of use for candidates appearing for credit officers interview also. Number one, what is the definition of accounting? The art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof. Then number two, bookkeeping. It is mainly concerned with recording of financial data relating to the business operations in a significant and orderly manner. What is the concepts of accounting? Separate entity concept, going concern concept, money measurement concept, cost concept, dual aspect concept, accounting period concept, then periodic matching of costs and revenue receipt, a realization concept, conventions of accounting, conservatism, full disclosure, consistency, materiality. Number five, systems of bookkeeping. A, single entry system. B, double entry system. Then six, systems of accounting. Cash system accounting. Mercantile system of accounting. Principles of accounting. A, personal account, debit the receiver, credit the giver. A real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all gains and incomes. Number eight, meaning of journal. Journal means chronological record of transactions. Number nine, meaning of ledger. Ledger is a set of accounts. It contains all accounts of the business enterprise, whether real, nominal, or personal. Number 10, posting. It means transferring the debit and credit items from the journal to their respective accounts in the ledger. Number 11, trial balance. Trial balance is a statement containing the various ledger balances on a particular date. Number 12, credit note. The customer, when returns the goods, get credit for the value of goods returned. A credit note is sent to him intimating that his account has been credited with the value of goods returned. Number 13, debit note. When the goods are returned to the supplier, a debit note is sent to him indicating that his account has been debited with the amount mentioned in his debit note. Contra entry, which accounting entry is recorded on both the debit and credit side of the cash book, is known as contra entry. Petty cash book. Petty cash is maintained by business to record petty cash expenses of the business, such as postage, cortage, stationery, etc. Promissory note. Promissory note, an instrument in writing containing an unconditional undertaking signed by the maker to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Number 17, check. A bill of exchange drawn on a specified banker and payable on demand is known as check. Stale check. A stale check means not valid. Of check, that means more than, now it is 3 months. More than 3 months, the check is not valid. Then number 20, bank reconciliation statement It is a statement reconciling the balance as shown in the bank passbook and the balance as shown by the cash book. Ob- Objective to know the difference and pass necessary correcting adjusting entries in the books. Number 21, matching concept. Matching means requires proper matching of expenses with the revenue. Number 22, capital income. The term capital income means an income which does not grow out of or pertain to the running of the business proper. Number 23, revenue income. The income which arises out of and in the course of the regular business transactions of a concern. Number 24, capital expenditure. It means an expenditure which has been incurred for the purpose of obtaining a long-term advantage for the business. A revenue expenditure, number 25, an expenditure that incurred in the course of regular business transactions of a concern. Number 26, deferred revenue expenditure. It should not be deferred. It should be deferred. Deferred revenue expenditure, an expenditure which is incurred during an accounting period but is applicable further periods also. Example, heavy advertisement. 27, bad debts. Bad debts denote the amount lost from debtors to whom the goods were sold on credit. 28, depreciation. Depreciation denotes gradually and permanent decrease in the value of asset due to wear and tear, technology changes, lapse of time, and accident. Fictitious assets. Number 29, fictitious assets. These assets not represented by tangible possession of property. Examples of preliminary expenses, discount on issue of shares, debit balance in the profit and loss account when shown on the asset side of the balance sheet. Fictitious assets. Intangible assets, number 30. Intangible assets means the assets which is not having the physical appearance and it have the real value. It is shown on the asset side of the balance sheet. Number 31, accrued income. Accrued income means which has been earned by the business during the accounting year, but which has not yet been due and therefore has not been received. Number 32, outstanding income. Outstanding income means income which has become due during which the accounting year, but which has not so far been received by the firm. Number 33, suspense account. The suspense is an account to which the difference in the trial balance has been put temporarily. Number 34, depletion. It implies the removal of an available but not replaceable source, such as extracting coal from coal mine. Amortization, number 35, the process of writing off intangible assets is termed as amortization. Number 36, dilapidations. The term dilapidations to damage done to a building or other property during tenancy. Number 37, capital employed. The term capital employed means sum of total long-term funds employed in the business. That is, share capital plus reserves and surplus plus long-term loans minus non-business assets plus fictitious assets. Number 38, equity shares. Those shares which are not having preference rights are called equity shares. 39, preference shares. Those shares which are carrying the preferential rights are called preference shares. Preferential rights in respect of fixed dividend. Preferential right to repayment of capital in the event of company winding up. Leverage. It is a force applied at a particular work to get the desired result. 41. Operating leverage. The operating leverage takes place when changes in revenue is greater in EBIT, earnings before income tax. Then 42, financial leverage. It is nothing but a process of using debt capital to increase the rate of return on equity. Number 43, combined leverage. It is used to measure the total risk of the firm is equal to operating risk plus financial risk. Number 44, joint venture. A joint venture is an association of two or more persons who combined for the execution of a specific transaction and divide the profit or loss their agreed ratio. Number 45, partnership. Partnership is the relation between the persons who have agreed to share the profits of business carried on by all or any of them acting for all. Number 46, factoring. Factoring is an arrangement under which a firm called borrower receives advances against its receivables from financial institutions called factor. Number 47, capital reserve. The reserve which transferred from the capital gains is called capital reserve. General reserve, the reserve which is transferred from normal profits of the firm is called general reserve. Free cash, the cash not for any specific purpose, free from any encumbrance like surplus cash. Minority interest. Minority interest refers to the equity of minority shareholders in a subsidiary company. Thank you.